No, they're so busy sort of training themselves to go and make money. Why do they want to make an alternative? When in fact the leading hedge fund managers a couple of years ago got $3 billion each. Right now, what you see is the world divided, roughly divided into two camps. There is the hysterical austerity camp, which largely occupies Europe and the United States, which says that the answer to our difficulties right now is to retire the debt, because we became too indebted. And it's interesting to see, how capital works. I mean, one of the theses that I work out in Capital is the idea that actually capital never solves its crisis problems, it simply moves them around. I got right the way through to my PhD without paying anything. This is a sensible society. When you tell people that, they say, what planet did you live on? And actually right now, the demands of the Chilean student movement in relationship to Pinochet is we want free education. Well, now we've got to this situation where the bankers got into trouble and they got into debt. And because they got into debt, we had a crisis. And as a result of that, New York State is a bit in debt. So it's got to retire its debt. How does it do it? Well, one of the ways it raises tuition on CUNY. Which does what? It increases student debt. You're privatizing the debt on the backs of students. This austerity mantra, which we have, is an answer to the particular question. And as we see from Ireland and as we're seeing from Greece and all the rest of it, it doesn't work. What it does is people get poorer, and because they get poorer, they spend less, and the whole economy starts to go down and down, further and further and further. And Keynes saw that as a problem and said, well, the only thing to do is have the government step in and kind of get it going back in the other way. But no, we can't do that because the Republicans won't let you. Marx sets up a very interesting little model of how a capitalist society might work. He says, imagine there are only two classes in society, the capitalists and the workers. What is the total supply that the capitalist creates? Well, the capitalist puts all of that to work and actually creates a surplus at the end of the day, which is called profit. So there must be more at the end of the day than there was at the beginning of the day. So the question is, who's going to demand that more at the end of the day? And Marx's answer is, well, it can't be the workers who do it, so the capitalists have to do it. Now, this is a very peculiar economy. The capitalists actually generate the surplus, and then they have to find the money to pay for it. What the capitalists do is to buy now and pay later. What they do is they actually launch further production the day after. So it's the expansion of the system the day after that mops up the expansion of the day before. And you need enough money to do that. The gap between yesterday and tomorrow is filled by the credit system. So actually buying now and paying later is like issuing IOUs. That's what you do. And the IOUs then become larger and larger and larger as time goes on. What this leads to is a very simple relationship, which is that the accumulation of capital actually matches the accumulation of debt. And in the history of capitalism, there's a crucial relationship between the two. If you retire the debt, you end capital. And I wrote a nice little piece, which sent to the Wall Street Journal, which I didn't publish, which said, well, actually, the Republican Party, if it really does insist on this debt stuff, it doesn't really mean it, because, we know what Reagan did with the debt, and we know what Bush Jr. did with the debt. If they really insist on this, they will do a better job of ending capitalism than the working class has ever done. Because if you end debt, and you end the expansion of the debt economy, you end the possibility for the accumulation of capital. But this then, of course, immediately poses some problems about, well, how is the debt managed? And debt management then becomes crucial to the dynamics of a capitalist system. And what we've seen is debt management going crazy, of course. Because who appeared on television after the bankruptcy? We didn't see the president. Who did we see? We saw Ben Bernanke, who's the top of the banking system. And we saw Paulson. That's the state finance nexus. They were it. And at that point, they were the ones who came out with bits of paper and said, you've got to do this, you've got to do that, you've got to do this, you've got to do this, you've got to do this. And Bush kind of said, oh, yeah, okay, all right, yeah, ooh. That was the state finance nexus of work. is a very, very brilliant thing, because the state financed nexus, by and large, doesn't want to be seen. It always remains hidden. Black Monday, you know, and I don't know, tremendous crash in the stock market, which was also connected to this sort of grumbling crisis of the savings alone, in which more than 1,300 banking institutions went under in the United States. So that period, 1987, there was and after that happened, people asked questions. They had this big meeting of all of the big guys, you know, Summers and Volcker and all those other people. But one thing that did come out as fairly consensual, that the United States was no longer in a position to decide unilaterally. That a crisis of that sort could not be managed simply by the US. It would require international agreement, international action. That is, there has to be almost a global government, which is going to actually consensually decide. It doesn't have to be a kind of, hierarchically organized, monocentric, but it has to be total agreement between them as to what to do and how to do it. What we saw in the wake of the Lehman Brothers was an immediate period of brief agreement between everybody. We've got to stabilize this system. After the system gets stabilized, roughly, then they all break apart and go their own way. Power. The political choice in this country is driven by class power, clearly. And this is what the Occupy Wall Street people are saying, basically. You know, we live in a class-dominated society where the one thing you can't talk about is class domination. Because there's something nasty about that, you know. You might be socialist or something awful like that. And in this instance, what we've seen is a couple of crises which have not gone to waste. But I'd like to suggest to you there's a certain continuity here. When Ronald Reagan came to power, what did he do? He reduced the top tax rate from 70 to 30%, as I've already remarked. He had an arms race with the Soviet Union. Huge arms race, which was deficit financed. And towards the end of the Reagan administration, David Stockman, his budget director, said, well, our plan was to run up the debt in such a way that in order to retire the debt, we could get rid of all of the social programs we didn't like and cut all of the environmental regulations which industry doesn't like. So the debt was an excuse to do that. It was an excuse to lead a class assault upon social welfare structures and a class assault upon environmental regulation. What you're doing is actually succouring the rich and screwing the poor. But that's been going on for some time. Now there's a wonderful moment, if you've seen the movie Too Big to Fail, or read the book by Sorkin about Too Big to Fail, right at the end after they've struck this deal and they've made the banks accept all this money. And Bernanke says, well, I hope that they'll lend it out. And Paulson says, oh, of course they'll lend it out. Well, of course they might lend it out. And of course they didn't. And of course it's very, very interesting to see, you know, how in the United States people say government can't actually do anything to expand the economy. And you say, what the hell are they doing in China? You know? Oh, and by the way, take a look at Singapore and a few other places as well. You know, the government's heavily, heavily involved. And in fact, the only successful economies over the last 10, 20 years have been those that have been centrally directed. I.e., the Chinese had managed to recuperate 27 million jobs in about 6 months. How the hell did they do that? But it also turned to the banks and said to the banks, lend. So the banks lent out furiously to all these development projects. The result has been a boom in property prices in China, property development in China, which matches the boom that's went on in the 1990s into 2000 in this country. It's a huge, huge boom. And as a result of that, the Chinese, of course, have actually launched demand into the rest of the world economy at a huge rate. Australia. You go to Chile and Australia and people say to you, what crisis? So half of the world is on this expansionary game and the other half is on this austerity game. So what does this mean for democracy? Capitalism has always been about expansion, for the reasons I've already mentioned. It's always been about growth. Have you ever heard anybody who's pro-capitalist say they're anti-growth? In effect, a crisis is defined as zero growth, right?
I mean, since when is zero growth a crisis? I mean, actually, it turns out zero growth is one of the best things that can happen to the environment, but leave that aside. Because when you think of the global capitalist economy and where it is, the frontier has closed. I mean, the Soviet Union collapsed. That's now opened up. China has entered the system. There's no geographical frontier. I mean, okay, parts of Africa haven't yet been fully absorbed, and there are parts of Central Asia, but relatively. But basically speaking, in the same way there was a big impact when the frontier closed in this country back in the sort of 1890s or whenever. So the frontier, the geographical frontier is closed. There's no way in which you can expand the system. One of the things you will notice since the 1970s onwards is that as finance has become more liberated and can go and do its thing, it's become more volatile. It started actually to develop completely new market structures. Many of them are actually rather old but were very minor, but they became major very quickly, like hedge funds and the like. And what that suggests is that actually the credit system is in itself generating new market possibilities for the accumulation of wealth. And that is precisely what we've been seeing, of course, in what's happened in financial markets since the 1990s. Much of the concentration of wealth that's occurred in the world has occurred through, of course, sucking wealth out of financial markets. But fictitious capital has become much more significant in the system. And as fictitious capital has become much more significant, so what we've seen is a kind of almost a closure of how that fictitious capital works. Now, when you use the word fictitious capital, people can say, well, it's a very abstract concept. Give me an idea of what you mean. What I mean is this: there's a very interesting positionality of financial institutions. Who lends the money to the developers who build tract housing around San Diego? The financial institutions do. Okay, so the tract housing is built, you know, the labourers get paid, you know, everything goes on, and then at the end of the day, the houses are there. Who do they sell them to? Well, they sell them to some people who need a mortgage to buy them. Who provides the mortgage? Well, actually, the same financial institution that actually funded the developers also provides the mortgage. So you see what's happening here is that actually the financial institution regulates the supply and the demand. And of course, because it's regulating the supply and demand, it is also in a position to manipulate prices. And as it manipulates prices, and so pretty soon, you know, you get the asset bubble in the housing market going on and on and on. And if at the end of the day, the financial institution can't find anybody to buy it because they haven't got enough good credit rating, you say, well, instead of 20% down, why don't we say 10% down? And then after a bit, well, instead of 10% down, why not 5% down? After a bit, oh, well, we get our money out of fees anyway. We don't care about the mortgage. We just package it off and sell it to some unsuspecting municipality in Norway saying it's as safe as houses. This is the way fictitious capital works. And what we've seen are more and more signs of fictitious capital operating in this way, and immense wealth being extracted in this way by certain classes in a society. And along with that goes a tremendous concentration of wealth. And what we've seen, as everybody obviously knows, over the last 30 years, is tremendous concentrations of wealth and income, and that wealth and income then has tremendous implications for the wielding of political power. So you end up with a following prediction, that if this system continues and we do not make any radical changes in it, and I see no sign of any radical changes coming from pretty much any quarter, if we make no radical changes in it, we're simply going to perpetuate in which one half of the world is going to be actually drawing immense wealth on the basis of fictitious operations, while the rest of us will be looking in for enough to eat. And we know already that the amount of poverty, the amount of hunger amongst children in this country has been increasing, and we will see that in many other parts of the world.